The nominal price of silver in fiat US dollars ripped red hot higher today, and we are now in price breakout mode. After nearly 4 years of grinding sideways consolidations and frustrations of the overhead, seemingly endless tamp downs from 30 an ounce, silver rolled out of bed today in the leveraged Western derivative markets and made a major move for the momentum longs now piling in on the trade beyond $30 an ounce. Shortly, we will get into technicals on where this latest move could run before profit taking and consolidation occurs again. But first, the silver squeeze memers were out on Twitter today, and we should celebrate the moment with a plus 5% price jump candle on silver for the day.
It's coming. Oh, I'm so happy. It's coming.
It was nice after pounding the table for so many years, making the bull case for acquiring prudent bullion positions, to finally be witnessing gold lead and now silver following up worldwide. Yeah, I'm not talking about just here in the United States either. Earlier this week, I posted this monthly local silver price chart from around major economies in the world, and what it screamed visually to me was silver breakout beyond 30 an ounce was inevitable and potentially imminent. You remember the spot gold-silver ratio, technical formation, and potential cliff fall I was suggesting might occur? Well, it appears we are now in a falling GSR mode. It looks like 75, 70, even the lower 60s could be ready to come back into fruition if silver keeps running in value escalations relative to gold. Of course, this is a large, rather high cliff we are now descending off. The last time a silver bull market run caused the GSR to fall from heights like this was the beginning of the infinite QE late 2008 global financial crisis fiasco, which ran down to the low 30s of a gold-silver ratio by April 2011. And we'll have to keep our heads on a swivel as the next bank crisis and consolidation phase crashes into financial markets. And the size of the underlying stealth bank lending facilities brought on since the 2023 digital regional bank runs now dwarfs what we saw back in the 2008 global financial crisis. Looking back east, we're going to first head to China and see their fiat yuan silver price breaking out as well. Inventories of underlying silver bullion bars on the Shanghai Futures Exchange are at over 8-year low levels. Price premiums for silver locally in China continue around the plus $3 an ounce above the Western derivative-driven silver spot price markets. Silver speculators on the Shanghai Futures Exchange are again piling on bets for silver options and leveraged futures contracts. Bloomberg posted this chart today. Note the use of the word shortage when referring to silver, as opposed to a more simple, innocuous sounding term like supply deficits. Global silver demand is outstripping supply. Those 4 consecutive bars that you see in this chart here basically add up to just under 1 year of new line silver mine around the world. Nearly 800 million ounces or more demand than new mine supplies during the 2020s price consolidation that may have just ended this week. So where is all this outsized silver coming from to make up for the deficits in supplies over the last 4 years of price consolidations? Well, it seems about 400 million ounces of silver flowed out of these combined warehouse exchanges. Many of those bars were redeemed from unsecured silver ETF piles, and I bet a lot of them were exported to the east, like China and India. Let's check in on the aggregated Eastern shadow price of silver at the moment. It has now ballooned beyond 376 an ounce in data adding up, starting at $1.92.5 an ounce for silver to start 1970, up until the closing data yesterday. Silver's aggregated price data from 1970 until today with the leveraged COMEX casino has floundered from $1.92.5 an ounce beginning in 1970 with silver to now a mere 15 cents an ounce, adding up all the data over more than 53 years of silver trading within the COMEX hours. My contention is the red spot price and Eastern blue lines will meet again for a fifth time much later down the line in the silver bullion bull likely mania phase. Manisha Gupta confirmed this week that India imported 120 million ounces of silver Q1 2024, and given their local silver price in fiat rupee terms has broken out to all-time nominal price highs, it's not a surprise to see their imports of silver in April come down from their record Q1 pace. Local premiums are negative too, meaning that there's likely more sellers than buyers at the moment. The spot price for industrial silver users in fiat Japanese yen terms is also climbing a wall of late. Its local price still needs to more than double to reach levels peaked back in 1980, over 44 years ago. And the sucking sound for physical bullion from underlying Western derivative exchanges like the COMEX continues onward, with still literally no one trading the phony COMEX 400-ounce 4GC contract, which I contend was used in March 2020 to visually flood the system with unsecured ETF 400-ounce bars held between London and New York warehouses. That was done in order to give off the impression that the system is flush with deliverable gold bullion. It's not, and the remaining pile is quickly collapsing with a record central bank gold buying on net worldwide the last 2 years and first quarter of this year, 2024. Governments aren't the only large players buying gold and allocating in size. This week, famous investor Michael Burry disclosed adding $7.6 million in the Sprott closed-end gold fund to his portfolio. On the other side of this break, we will hear again from a long-ago silver bullion bull who warned us of the coming financial world changes yet to unfold, all the way down to the very fiat currency cash notes debasing in our pockets.
Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates.
And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Make some room in your safe because a whole lot of silver could be coming your way. SD Bullion's Monster Box Sweepstakes is back, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a Monster Box for the first time ever. This stunning silver coin is a highly detailed masterpiece featuring a hidden inscription on one of the tree branches that changes every year. So put on your best flannel and become one with the forest, and take your shot to win 500 silver trees from SD Bullion, because someone's gonna win it, so why not you? Click the link below for your chance to win.
The spot gold price in fiat US dollars finished this week at over $2,400 an ounce, while the spot silver price blew through its old $30 an ounce resistance dome. And silver closed this week priced at over $31.50 an ounce bid. The spot platinum market is beginning to show some strength, closing this week just under $1,100 an ounce. The strength of silver caused the spot gold-silver ratio to fall backwards, down closing this week at 76. China sold a record volume of nearly $60 billion in U.S. debt-denominated assets this past quarter 2024, a record size in nominal U.S. debt sold. With their real estate market still floundering month on month and a trade war ratcheting up with exploding tariffs to come, surely China is piling into physical commodities, stockpiling while they still can at reasonable relative values. Copper prices are again near all-time nominal high levels in terms of price, as an apparent short squeeze on the COMEX has dislocated their copper price, now over $1,000 more per metric ton in New York versus London. The problem is much of the remaining diminished copper supplies are Russian and Chinese hallmark manufactured. So, energy infrastructure or trade war. Pre-1982, copper pennies are now worth 3 times their face value in melt. Even the zinc replacements will become more valuable in time as zinc values inevitably climb at some point down the line. This chart of European Union and other nearby Western nations on the continent. It reflects the respective unfunded entitlements by country. Rather alarming, the size of them. Spain at the end of 2021 led the way with over 5 times their GDP owed in unfunded entitlement programs. Only a smattering of blue bars representing private/funded entitlements on this chart, and the yellow portions are all unfunded. Turning now to a worsening economic situation on the island of Cuba, which has put limits on cash transactions and access to ATMs. The government is encouraging the use of electronic payments as cash has seemingly gone into hiding. Checking in on cbdctracker.org, and what is apparent is that many of the largest BRICS nations are in the lead, with countries like India, China, Russia, Turkey, and Saudi Arabia all having launched pilot CBDC programs within their respective jurisdictions. Now, to close this week, we're going to look back at Scott Menard's forewarning about the future of physical cash notes in late 2011. This was an interview he did on Fox Business News, and you'll see in the video clip the price of spot silver at the time, I believe it was late summer, early fall of 2011, was $32 an ounce. So perhaps next week we'll see that number on our spot price charts again.
They go exponential like we're seeing in some of the non-precious metals?
I think there's a high probability of that.
Going back to late 2011 to hear why New York Federal Reserve advisor Scott Menard was a 20-year bull on silver bullion back then, when the spot silver price had fallen from 50 to just over 32 fiat Federal Reserve notes per troy ounce.
But what about silver? Why silver, Mr. Scott Menard? He's Chief Investment Officer at Guggenheim Partners. He has more than $100 billion in assets under management. Come on, man.
Silver?
Yes, why silver?
Well, look, it's the way the story ends is this, right? We are carrying around in our pockets chits of paper. And in 20 years, we're going to be talking to our grandchildren. And we're going to say how we used to take these pieces of paper out and hand them to people, and they gave us things of value in exchange for them. And then our grandchildren are going to look at us incredulously and say, "Oh, Granddad, how stupid do you think I am? Everybody knows that paper money isn't worth anything."
You really believe that's going to happen in 20 years?
Yes.
And so, like many were saying back in late 2011, even this now billionaire New York Fed investor advisor is still stating that later this decade and possibly into the next, a coming exponential silver price rise remains a high probability future event. That's going to be all for this weekly SD Bullion market update. As always, to you out there, take great care of yourselves, those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.